Did you know that you can buy a home with zero down, no private mortgage insurance, and competitive rates, all because you served? That is the power of the VA home loan benefit. Today, we'll break down what it is, how to use it, and what you need to watch out for. You can make this benefit work for you. First things first, the VA doesn't lend money. It guarantees part of your loan, which allows private lenders to offer better terms. Here are the basics. No down payment required. You can finance 100% of the home's purchase price with full entitlement. No PMI. Unlike conventional loans with less than 20% down, VA loans don't require monthly mortgage insurance. That is a huge amount of savings. Competitive interest rates. VA loans often have lower rates, even if your credit isn't perfect. Limited closing costs. Some fees are capped or prohibited entirely, and sellers can cover up to 4% of the total loan amount in closing costs. VA appraisals. The home must meet VA's minimum property requirements, basically safe, sound, and sanitary. This is not a one-time benefit. You can use the VA loan multiple times, even carry more than one if you qualify with your entitlement. Whether you're buying your first home or your third, this benefit can make home ownership much more affordable. Now, before applying, you need to get your Certificate of Eligibility. It proves to the lender that you qualify for a VA-backed loan. You can get your COE several ways: online, through the VA website, through your lender. Many can access it within minutes, just like you can. By mail, takes a little bit longer, but for anyone that wants to use mail, you can use VA Form 26-1880. You'll need your DD-214 if you're a veteran, or a statement of service if you're still on active duty. For Guard and Reserve, other service documents may be needed, and you must have served 6 years. If you're eligible, the COE will show whether you have full entitlement and if you're exempt from the funding fee. The VA funding fee helps keep the program running and replaces monthly mortgage insurance. For first-time use with no down payment, the fee is 2.15% of the loan. It increases to 3.3% on subsequent uses if you put less than 5% down. But here's the good news. If you are service-connected and have a disability, you could be exempt from paying it. Reach out to your loan officer to see. Surviving spouses receiving VA benefits can also be exempt. Purple Heart recipients are exempt if still on active duty at loan closing. If you pay the fee and are later awarded a retroactive VA disability rating, you may even be eligible for a refund. Entitlement is how VA determines how much your loan it will guarantee. For full entitlement, if you've ever used a VA loan or restored it by paying off and selling the home, there's no limit to the loan amount VA will back. You can buy a $200,000 home or a $1 million home if the lender approves you. Partial entitlement. If part of your entitlement is tied up in another property, then loan limits apply. You may need to make an additional down payment on the next property depending on what's available. That could be up to 20%. After selling or refinancing a home out of VA, you can request a full entitlement restoration. Knowing how much entitlement you have helps you plan your next move wisely. Now, let's talk about refinancing. There are two main types of a refinance: an IRRRL, a streamlined refinance for existing VA loans, no appraisal or income verification required. It's great for just lowering your interest rate. The thing is, you must already have a VA loan. No cash outs allowed, and they do have a funding fee. It's only 0.5%, and it's waived if you're exempt. For the second type of a refinance, you have the cash out refinance. This lets you refinance any loan type into a VA loan and take out equity. You could take out up to 80 to 100% of your home value, depending on the lender and how much equity you have. Full underwriting is required for this. Higher funding fees are there unless you are exempt, then they are still waived. Both can roll closing costs into the loan. Just be sure the numbers make sense before you proceed. Now, when it comes to picking the right lender, not all lenders handle VA loans equally. Ask these questions. How many VA loans have you closed recently? Do you know what a Tidewater is? Can you retrieve my COE for me? And are you familiar with the VA appraisal guidelines? You can also ask them for what fees they are charging, and are they capped or optional? Can you close in 30 to 45 days? Also, Compare loan estimates carefully. The VA doesn't allow prepayment penalties, and junk fees should be questioned. If something feels off, don't be afraid to get a second quote. The VA Home Loan Benefit is one of the most powerful tools you have as a veteran, but using it wisely starts with knowing the facts. Claim Climbers doesn't assist with VA home loans, but you can always reach out to vetted VA or your lender, VSO, or VA loan specialists that can help you move forward. Do your homework. Find a lender who knows the process and take advantage of the home buying power you've earned. Thanks for watching. Take care.